Show you how I got into a trade entry on Euro US dollar using a fair value gap and also using a fair value gap as my exit position. So far you can see that the structure has been bearish, created a lower high and a lower low, came back up around liquidity, created a lower high and a lower low. So I was anticipating for price to come back into this key level. This was my last impulse to the upside, tapped into this inefficiency, also called the fair value gap, before it dropped down, breaking this 30 minutes low. So I was anticipating for price to come back into this key level, and once we're in there, I want to see a 5-minute shift in market structure. So, and as you can see, the moment price tapped into that position, we created a low, a high that tapped in, dropped down, breaking structure right there. So the moment we broke this structure, we created this high right here, which tapped into this position, but I didn't get in because that was on Thursday, and I was anticipating for this trade to happen on Friday. So right here was my previous day high, and it's also a liquidity. And whenever there's inefficiency, a fair value gap resting above a previous day high, you have to be anticipating for a run on stop losses, which is this previous day high, because so many traders will be trailing the stop loss from this high to this position. So that was why I put my entry position at this fair value gap, and I used this overall high as my stop loss. And as you can see, price taps me in and delivers straight to the take profit.